Hello, you're listening to the Motor Trade Radio podcast, and we're delighted to welcome CAP HPI's Director of Valuations, Derren Martin, for his monthly review of used car value trends. So welcome back to the podcast, Derren. How are you doing?
Very well, thanks, Curtis. Yeah, thanks for inviting me back on.
It's an absolute pleasure as always, Derren. So glad you're back on. And I think Jeremy was wanting the slot now, but we'll obviously work between you both of you.
I've offered it to him, but he's quite back, I think.
I think he quite enjoyed it last time. I think he's getting better at it. He does enjoy it, doesn't he?
Yeah, it's a very good job. Very good job. I'm not really needed, I don't think.
Careful.
Well, Derren, the latest CAP HPI editorial has just been published. So can you start by bringing us up to date with that all-important headline 3-year 60,000 figure for August, and maybe give it a bit of context by telling us how that compares with previous August?
So the headline figure at 3 years is 0.3% down, which is quite a small movement. Obviously, it's down. It's about £45 on average. So it's quite similar to previous August. Actually, the last two Augusts were very unusual because we had last year values going up. The year before that was a strong one as well because it was sort of we came out of the first lockdown, didn't we, over that sort of summer. So ignoring those 2 years, this is one of the strongest movements we've had of a 0.3. And I think 7 out of the last 10 years we've had a movement of less than 1% down. So it's a fairly normal month in percentage movement terms, but it doesn't feel particularly normal because off the back of the previous 3 months, really, where they've also been very flat. So we had this sort of summer of plateauing where values have been very steady overall. There's obviously lots within that, as we always talk about with various fuel types and sectors, but that movement of 0.3% is more or less in line with August, but it doesn't paint the whole picture because you've got stronger values. You've actually got movements up on younger used cars, an average of 0.1% up at 1 year, and more than that at 6 months. And then older stuff is down sort of 2.2%, so is struggling by more. So that's about £100 on a 10-year-old car. So you've got lots of moving parts within it, but the 0.3% is that headline figure.
And on that point, I mean, we've had 7 months now of drops, and we've got to be careful, haven't we? Because when we talk about a drop, they're not significant drops in the market. And as you've just clearly said there, that 0.3 is a strong August into September movement, really, in all things considered. But and you do make it very clear in the editorial that this is a plateau period, not a decline. And we've got to be careful how the message goes out about this, don't we, to the sector?
Yeah, definitely. It is a definite plateauing. What you have to realise, and we very easily forget, is that values tend to come down. Cars will deflate as they get older in their life cycle. Cars depreciate. They are generally a depreciating asset. Last year was highly unusual, and so was the previous year. We have had years of strength, but 2019 was a weaker year. So values do tend to come down. In 2019, values over this 4-month summer period, values dropped by 8.4%. I was looking back at sort of more normal years. 2016 was probably a very normal year for valuations. And in that year, values dropped by just over 5% between May and August. And this year, they've dropped by just 2%, just over 2% over that same period. So we've had a real flat summer. And basically, as we've said before, because supply and demand are well matched, but both being on the low side, because obviously you've got low new car supply, so low numbers of part exchanges and especially fleet returns. And then you've got low demand, which we've or lower than normal demand because of the cost of living crisis that we put it down to. So a very, very flat summer for valuations, really, for values.
And before we look at the figures in detail, Derren, what have dealers been telling you about stock levels for the month?
I would say that the general thing to say about feedback from retailers is it's very mixed. There's not necessarily a pattern. You've got some that are doing better than others. I think stock levels are okay, but they would all like more clean cars, cap clean cars. They are struggling to buy at the prices they want to buy for, and I think we're in that situation where trade prices remain high and retail is under a little bit of pressure. And in that situation, it's quite hard to buy at the prices that are out there now and get a margin. So we've definitely seen some margin squeeze, and that's probably the theme from most dealers is that their margins are under a lot more pressure than they were. And obviously, last year they were making good money, excellent money. So this year it just has been a little bit harder, and they're having to work a bit harder. But stock levels, I would say, are just about okay, but it is tough to buy decent cars at the moment just because of that shortage.
And in terms of what they're saying about consumer demand, because obviously we've got the headwinds of the cost of living crisis, rising inflation, rising interest rates, rising energy bills. How are they all impacting on demand over the course of the month?
Well, again, it's mixed. I think the franchise dealers are probably a little bit more upbeat than others, especially with sort of the signs of September around the corner as well. But I think consumer demand is low. It's kind of what you expect in the summer months anyway. But especially this year, I think people are going on holiday more than maybe they have done in the past. They maybe haven't had a holiday for a couple of years, so there's definitely a lot of people are away, and demand has been affected by that. But that's kind of what normally happens this time of year anyway. We are seeing sort of maybe that bottom end is a bit more affected by the cost of living crisis again, with those older cars being probably dropping slightly more in percentage terms. And once you get higher up and those cars that are in cap clean condition are a year old, when you can find them, they're going quite well. They are in demand for consumers, especially if they can't get a new car. So yeah, I think consumer confidence is okay-ish at the moment. And I think most dealers are waiting to see what September brings when people are back from their holidays.
Yeah, and I mean, in terms of, you mentioned briefly earlier around that sort of age profile, and you just talking there about those older cars, that there seems to be a view that stepping back away from that because they want that ready to retail, they don't want to get involved with long work and prep jobs because one, cost, and two, the delay of getting those vehicles onto retail. But what other notable trends are you seeing at the minute around the age profiles and vehicle types and pricing structure at the minute?
Yeah, well, I think condition is key, and we've made some adjustments this month. We've done some research, we've done a lot of analysis over the past 6 months, and we've made some adjustments down on our average and below values. So they work off an algorithm from Clean, based on the amount of damage on a vehicle and how much it would cost to repair it. We've looked at that and we've made some adjustments down on average and below, because condition is key. That's what everybody's talking about. Buying, even though cars are in demand, because there's a lack of supply, it really is only those cap clean cars that are in high demand. So there's definitely a theme there. Other themes that we've seen: fuel type, petrol and diesel values are coming down, and anything alternatively fueled, well, not anything, but on average, alternatively fueled vehicles have been going up, only slightly, but they are going up and they are popular. Dealers are now a lot more confident with stocking electric vehicles and hybrids, and obviously consumers are asking for those with the cost of living crisis. So even though you still do need to look at the costs that it incurs on having an EV. But there's definitely more confidence in buying those sorts of vehicles and seeking those sorts of vehicles out. So fuel type is a definite trend. Sectors, there's not a lot of difference between sectors really. They're all relatively stable. City cars have gone up slightly. Maybe people are coming out of a larger car and going into a smaller car, particularly maybe as their second or a third vehicle even. And we've put vehicles like the Citroen C1, Skoda Citigo, Smart 44, Vauxhall Viva, they've all gone up in value this month. So that's probably the only theme that's really there on by sector. But it's the fuel type that I think is the big story, really, that petrol and diesels are coming down, and alternative fuel vehicles are going up.
And Curtis, sorry, the Severa didn't seem to get a mention in any of that from
It didn't
Derren,
know.
did
The Vauxhall Viva did, and I thought I'd gone back to the 1960s.
The Zafira, I've stopped talking about the Zafira because Curtis said he'd sold all of his on his that were on his drive.
Hopefully, he's not invested in Coupe Cab, because I think they look like in not the Coupe Cab, the convertible market. I was going to ask about next. Really, what's happening there?
The Convertibles, they've just started to head down a little bit. They've been stronger for longer this year. They usually start to turn around June, July time, but they've gone on a little bit longer this time, but only very slightly again. So, but Zafira diesel has come down. Petrol is okay.
There you go, Curtis.
Yeah.
I mean, that was a question around the sort of convertible sector that we spoke to Jeremy about on the last call, because it was, as you say, it was stronger for longer through various reasons, and probably a mixture of, one, seasonality out the window for a while, the weather we've been receiving, and obviously disposable incomes and things like this. But do you think this will now, I think Jeremy said it was sort of stabilising. It's clear that it's starting to ease now. Do you think it's just on that way down now until we sort of get through this sort of third and fourth quarter until the new year now?
I would have thought so, yeah. I think they've stayed strong because there's not been many of them around. I think supply levels have been scarce for those convertibles and coupes. So I think that's why they've stayed stronger for longer. I think they will come down, but I don't think there's anything dramatic going to happen there. Just because, again, there's not the stock out there, and you could almost say that for most sectors of the market, that values may come down. But there aren't actually. There's not going to be an abundance of cars out there to cause a big ripple. We don't think. And convertibles have just stayed stronger for longer, but will probably come down now until maybe sort of December time, and then some speculative buyers will probably be buying them for the new year. See how they go then.
And on price bandings, I think sometimes we talk about, obviously, price bandings, what you're seeing in terms of that strength and weakness by price bandings. Have you seen anything notable there, or is it as usual, that midpoint and that sub 10, sub 5 mark under a bit of pressure?
We're looking at price point. We have seen that bottom end under more pressure again because of those cost of living concerns. So under £5,000 has come down by sort of 2.5%. Under £10,000 has come down as well, 1.4%. Once you start getting above 15, 20,000, it's actually okay. And values have on average have been really, really stable at those sorts of price points. Again, because there's not a lot of supply out there. So even if demand has been fairly muted, there's not the supply to mop that up. So there does seem to be a little bit of a theme that those at the bottom end cars are coming down under a bit more pressure. Dealers aren't really looking to buy work at the moment, and if those older cars need a bit of work, then that's a bit of a risk to put on to get in their workshops, because we hear about the parts that you can't get. If the market is going to drop away value-wise, which it is slowly, but that could increase, then do you want a car to be sat in a workshop for a few weeks? So that bottom end under a little bit more pressure.
And Derren, you touched on some of the trends by fuel type. I was particularly interested in what you were saying about electric vehicles and BEVs in particular, because the average there has increased by 1.2%, so fairly strong. And do you see that mostly on the late plate vehicles there?
No, it's across the board really. We've seen late plates have done okay, but anything up to 3 years old has generally gone up. So and it's almost across the board. So we've seen very little weakness in electric vehicles, and the same for hybrids and plug-in hybrids, and they've all fared okay. So it's not really just late plate stuff. Late plates are obviously in a little bit of demand. You've got rental companies that are looking to buy those cars because they're not getting them from the manufacturers, so they're very interested in late plate vehicles. But on an electric side, it is across the board, and obviously if you go to a sort of a 3-year-old one, maybe it hasn't got the range of more recent ones, but it does that job for us as a second or third car. But there's like the Honda E, so Hyundai Kona electric, Kia Soul electric, Vauxhall Corsa electric. They've all gone up in value this month. So, and that's sort of across different ages. So they've not gone up dramatically, but they have gone up. And obviously, some of those are already fairly expensive vehicles. But if you can't get a new one, people are looking for a used one, or if you've got a long wait for a new one.
And I mean, we've got the new plate arriving on the next Thursday, the 1st of September, the 72 plate. We're not sure we get that right because we lose track of what plate we're actually on now these days. But there is obviously a lot of talk about the order bank levels being full for September. We've obviously put that in context, but they might be full, but compared to pre-pandemic levels, probably not to the same level that they are obviously full ordered up. And I think even Lookers this week on their announcement said they had an order bank of 22,000 vehicles compared to the same period last year of 9,000 vehicles. So we know the order banks are full, but what are you hearing in terms of how that will boost the used car market? Those part exchanges coming back into the sector in September.
I still think it's a little bit unknown. It's very brand specific as well. So you hear of certain manufacturers that are fairly confident that they're going to have a reasonable September. But when you talk about a reasonable September, it's not going to be anywhere near where previous Septembers were pre-pandemic. So it is brand specific. There are going to be more volumes coming through. There are going to be more fleet returns coming through because they've been sort of at the back of the queue, whilst manufacturers focus on selling retail cars because there's more profit in that, and obviously they want to satisfy the consumer. But volumes will increase, but to how much is still remains to be seen. We speak to obviously a lot of manufacturers, a lot of franchise dealers, and I would say that there are some brands that are definitely more upbeat than others. And also, they might not all come through in September, but you might start to get increases September, October, November, December, and it depends on the brand. But that you can obviously, if you're loyal to a brand, that will throw back cars into the used car market from those manufacturers. So you might see where there is a lot of volume coming through for particular manufacturers, they might be the used cars that come under the most pressure if there's a bit of a lot of vehicles come back. But personally, I don't think that supply is going to increase dramatically just because it's September. It will improve, but it's not going to be anywhere near where it has been previously. And we're still going to be in for shortages in the used car market, I believe.
Yeah, and I think I think we discussed it on one of the previous ones where you were talking about, that manufacturers are being focused on specific models. One, either they've got the parts availability, or two, it's that strategic plan to move into that model sector, or three, it's a profitable vehicle for them to produce in terms of that return on profitability for them. So therefore, those are the ones that were entering the market in a bit higher volume than others, and therefore creating the part exchanges or PCP and lease replacements for that similar model. And that's where some of the pressure has been. And so it sounds like you believe that's kind of the same pattern, maybe a higher volume level, but the same kind of pattern moving through this sort of third and fourth quarter then?
Yeah, I think it's getting better. But yeah, there's still some very high, the highest volume cars that got produced. You still can't get them. And they're still being delayed and they're still not coming through in the volumes that they were. So yeah, there's definitely been a move towards, sort of trying to focus more maybe on electric vehicles, on hybrids, and on those more profitable, larger vehicles. So maybe like on a Puma rather than on a Fiesta or something like that, for example. So yeah, you're going to get, this is going to be with us for some time to come, really, isn't it? All these sorts of differences and changes to the market, and we're not going to get anywhere. We're not going to get back to anywhere near normal used car volumes because we've had 2 million cars missing from the market from registrations over the last 2-3 years. So supply levels are still going to be low, but demand is going to be lower as we enter into those winter months as well, probably when people start to really feel the cost of living concerns. So we could be in for demand dropping and supply levels increasing, but not to where they have been previously.
So to the listeners then, think getting the crystal ball out, which I forget that now. I think we can forget that crystal ball these days. But, where do you touched on it a bit there, but where do you see that those listening today, where should they be focusing now? We always talk about looking at the, live data, don't wait for the month to finish and change, it's kind of that kind of thing. But does it feel like, because August felt like it's similar to July, that lots of moving parts, lots of increases, decreases, but a fairly plateau point in the middle. What's your sort of outlook for the sort of coming weeks, should we say?
I think you'll probably get more of a downward movement than we've had over the last couple of months in September, just because volumes will start to increase. But on the flip side of that, you could say that demand might increase for that month as people come back off holiday. So it is really difficult to call, but I would be predicting slightly more of a movement down. As to dealers for what to stock, I mean, they know that better than I do. But again, look for those cap clean cars. I think maybe if you can get out to an auction and see some of the lower graded cars that don't require too much to get them back on back to a saleable rate, then they'd be a good vehicle to go for. I think if you continue to look for hybrids and electric vehicles, if you can make a profit on them, but really it's looking for those sort of vehicles that are at a price point, which means that you can make a margin on it, because we do think that retail margin is being squeezed a little bit, and they just have to be careful with what they're buying, and obviously I would say don't overstock at the moment as well, because it is quite a lot of unknowns out there about the cost of living and how that will affect. But having said that, in times of recession and that type of thing, you do get used cars doing well. They're always the staple diet, and they would always be in demand at a price. And we're not going to suddenly wipe off the increases that have happened over the last year. So there will be cars will still be ahead of where they were a year ago, even if they do drop slightly in the few months to Christmas.
And just to summarise, Derren, it's very much, from what you're saying, the market is very much sort of steady as she goes, and you've got to look at these figures in context, haven't you? And you drew that parallel, the last 4 months. You've got to compare that with previous summers, and there's no cause for alarm at the moment, and the market is tracking quite steadily.
Yeah, it's definitely stable. That plateauing is a stable picture. It's just a word of caution, I would say. But yeah, I mean, the dealers that we speak to, they're doing okay. A lot of them have said August was better than July, and it's okay. It's just not as good as it has been. And obviously, if you look back to a year ago, it's nowhere near as good as it was then. But it's okay. It's cars are still selling. Certainly hasn't dropped off completely. And we've actually seen in August a little bit of an uptick in the volumes that we see in the sold data, the trade sold data, and that means that dealers are stocking up for what will hopefully be a reasonable September. It's just, I guess, the word of caution is that volumes will increase. Might not be September, might actually be October once you start to get the fleet returns and part exchanges hitting the market. And then what happens in the winter months with demand. Those are sort of the words of caution, really.
Yeah, definitely. Well, look, Derren, many thanks for joining us on the podcast. Just a reminder to listeners, the latest editorial is actually available now to view on the CAP HPI website, which is cap-hpi.com. Derren, many thanks for coming back on, and we'll see you again in September to see how the month panned out.
Yeah, great. Thanks.
Yeah, brilliant. Thank you, Derren. And if not before, we'll see how the month goes. There might be some reason to get you back on mid-month or something, but who knows what happens in September. But thanks again for coming on. Much appreciated.
No problem.